Let's connect with Vineet Bhatnagar, Managing Director of Phillip Capital, to talk about the market mood, his latest ground zero report and Nifty levels. Vineet, good morning and thank you for joining us. Before we get into specifics and talk about your ground zero report, what happened on Friday? Friday's fall sort of got everyone thinking.
I guess there was some level of market news coming out from the Europe region, which was perhaps making everybody nervous. In fact, ahead of that, I think it is fair to say that the rollover period of Monday to Thursday is also a period when the correct trend may not sometimes come out quickly, because books needs to be rolled, and there is perhaps a motivation as to how the existing open position should move from one particular month to another. So it is quite possible that the latent selling pressure that was expected from FIIs, which never came about till Thursday, did come out on Friday.
How would you define the range of the market right now? Because if we are looking at nervousness and perhaps more downside, then how do you think the market would trend?
Actually, if we were looking at how the market has behaved post the election results, then one will notice that there have been about 11 weeks of sideways consolidation for Nifty as a benchmark. And that is quite a long time if you consider weekly charts as a technical aspect for the market. And having seen that, we believe that a very strong support is visible at 7530. At the same time, if the market was to just start moving ahead without touching this support level, then 7850 needs to be taken off on a weekly chart.
Vineet, for the month of August, if you have to carve out a Nifty range, what to your mind could be the broader signpost for the Nifty?
As I was saying earlier, I think it is 7530 to about 7850.
Okay. And in terms of some of the index heavyweights, especially the likes of a Reliance or an ONGC, which have taken a bit of a backseat, what's the call?
So you see, the assessment that we have is that while the market has been the market has been consolidating as far as the benchmarks is concerned on the sideways region for the last 11 weeks. More importantly, a lot of the large caps have actually fallen or taken a beating with lower volumes. We would have taken perhaps a different view if the fall in all the large caps had happened with greater volume. Given the fact that the volume has been actually lower than what it was when the markets were moving up, we have a bias that the market could actually move higher from here as against moving down. But in order to determine what could be a strong support, 7530 has been mentioned. And therefore, going forward, we are looking at a long bias towards some of these large cap stocks like Reliance, Bharti, Maruti, Oil India.
Okay, DLF, HCL Tech, they both are looking strong. ICICI Bank is emerging as the big gainer on the Nifty, which is helping the bank Nifty as well. Darshan was pointing out to ICICI Bank, this is one stock which has not cracked off late, and valuations are also looking slightly attractive. Vineet, do you want to comment on ICICI Bank?
Yes, I think I first want to comment on the Bank Nifty as a sectoral index, because that's a handy proxy to look at what could happen to the large PSUs and the private banks like ICICI Bank. I believe that if the thesis that we are propounding here of a Nifty actually not taking a beating any further in the next week or so, and the markets were to move off, Bank Nifty also will move up, and it has to take off a resistance level of about 16,000 or 15,600 odd. If that were to happen, clearly names like ICICI Bank will stand to benefit, and that is where we would lean as what we see as the looking forward view for the market.
Now let's talk about some exclusive stuff. The Ground Zero report, which Vineet and his firm, they release on a fortnightly basis. And Vineet, in your latest report, you are of the view that the diesel genset industry has a long way to go, and how's you are recommending your clients that one should buy into some of these diesel genset companies? Why is that?
Ground Zero is actually, one of the recent initiatives that we have started within Phillip India. We started about a quarter ago, and it is essentially a report which is in the form of a magazine as a format. It does not move towards coming up with stock recommendations, because it is essentially a combination of journalism and an analytical approach to equity research. It is based primarily on the primary research that we do at the ground level, the channel checks and the interaction that happens at the ground level. In that particular analysis, in one of our recent publications, we talked about diesels or DG set industry, and we believe that going forward, as the economy revives and there will perhaps be a continued power deficits and there may not be a significant improvement in the coal production, DG set as an industry is in a sweet spot. And in that particular respect, what we thought was the simple fact that the key players, and they are, all of them are major market shareholders like Cummins India and Kirloskar Oil Engines, are going to benefit a lot going forward from FY 15-16 onwards. So that's the analysis that came out in this particular Ground Zero publication.
Vineet, but does it make sense to buy any of these DG genset players now, because diesel prices will get deregulated and the cost of really running your factory or running your unit on a DG set is going to it'll become more expensive?
Actually, there is a driver to this entire, the thesis that we are talking about, which is actually for the acceptance of the emission norms or the Central Pollution Control Board norms that have got accepted from July 1, 2014. You are quite right that not only will there be a price increase in the engines and DG sets by about 10 to 15%, it will become a bit of a cost pressure on the users of DG sets for running their factories. But what we believe is that if there is a visible demand at the ground level for manufacturing, and there will be, as in our own estimate, a power deficit in many parts, it is quite reasonable to expect that in order to cater to the demand revival that will happen after a long gap, the pickup within the DG set industry is a very plausible estimate that we are putting out.
Coming back to the main staple of the market, which continues to be the consumer names, they've been laggards really in the run-up to the elections, is also the budget. But do you think that there is opportunity there, with HUL also touching the 700 mark, or at least coming close to that level?
Yes, I think, of course, it depends upon the time horizon that one is looking at, and we keep coming back to that time and again as to what is your view and for how long are you taking this view. If you are taking a view of 18 to 24 or 24 to 36 months for this particular equity market, then clearly names like HUL and other names who may look quite expensive at this point in time will definitely benefit even going forward. So one has to take a call on the purpose of picking up a particular name at this point in time. If it is for portfolio construction, one would look at HUL. Of course, if one is looking at a portfolio construction with a higher capital appreciation as an objective, and perhaps therefore a corresponding higher risk appetite, one will start leaning towards infrastructure or cyclical stocks.
But does it make sense to buy into cyclicals right now? There is no recovery in sight. Earnings have not bottomed out. Are traders and investors better off buying into cyclical stocks once earnings they pick up and once recovery is visible rather than patchy?
I think so. I think you are quite right that the conviction will come about when the numbers are being delivered at the ground in terms of the earnings, and there will obviously be an EPS re-rating that would happen for for the cyclical stocks. I guess one needs to find whether there are any early signs that one could spot, and that's the reason why a smart investor or an early mover will have an edge over a common person like you and me, and that is, I guess, what primary research could do, or an interaction with the channel checks could bring about, which will only be early signs, which could be only symptomatic in nature and not necessarily captured in the data. So it depends on what one can achieve as an individual investor.
Okay, we need just a second there. We need to mark the breakout on HPCL, which is up 2.5% as we speak. This is up for the fourth day in a row at the 50-day moving average. You can see the stock react. Oil and marketing companies, Vineet, HPCL in particular?
Yeah, we have been bullish on. I mean, not bullish because of any price chart, but just the entire rearrangement and the reorg that will happen in the oil space. Very top-down approach would definitely benefit the oil companies, whether it is Oil India or even the OMCs like HPCL, BPCL. So it is from that perception that one is taking a longer view. So you must not hold me in terms of whether the price really starts retracing from here. But the bigger view going forward for the next 2-3 years is a benefit for the oil space here.
Vineet, for someone who has a slightly higher risk appetite, he can digest a 15% volatility, maybe a 10% downside, but now wants to bet on multi-bagger. What would you advise? What are some of the high risk, high return ideas?
I think the high risk, high return ideas will definitely be in the mid cap space, and we are going to stick our neck out to look at names in the infra cyclical space. We have put out a report where we are talking about IRB, we are talking about Punj Lloyd, IVRCL. So these are the names that may show some amount of pain if as a downside if the market does not come back quickly. And perhaps there is a delay in the quarterly earnings, but if one has the appetite to hold on to it, and that is what one needs to demonstrate for a multi-bagger kind of a position, then I think these are the names that one can move in.
Vineet, IRB came out with good set of numbers, and they have a unique positioning because they are into toll road. But what about Punj Lloyd? I mean, Punj Lloyd has a broken balance sheet, and the numbers were also very ordinary. What makes you bullish on Punj Lloyd?
I think Punj Lloyd, the reason why we came out with a buy or a positive outlook on Punj Lloyd was based on the fact that the balance sheet repair is something that will be available to them, as the interest rate cycle hopefully takes a different turn. There is a visible demand at the ground level in terms of the order book, and also we combined it or overlaid it with a technical view on the way the price has moved for this particular stock. We believe that the downside is actually lower for this stock as against the odds for it to move up. So looking at the risk reward ratio, we believe that Punj Lloyd could be a surprise.
Okay, what about, some of the less talked about names? I mean, we don't talk about media that often. There's fertilizers as a pocket, some of the agri-related themes. Anything out there in the less talked about sectors or segments that, you're picking an opportunity?
Actually, I just wanted to add to the list that I pointed out to Nikunj. Even Nagarjuna Construction was looking good to us. Okay, coming back to the fertilizer and agri themes, my own view, going forward, as we start looking at bringing about greater market-related pricing under the new government and its commitment to move away from subsidies seed-related, structure that we have built as a legacy, I am actually quite positive on names like NFL. And it remains to be seen when that trigger would happen. So there is clearly a policy-related driver that needs to be visible in this particular space. But if it were to be visible, and if it were to start becoming a news-driven item, one should take a position in NFL. Likewise, in agri-theme, it is going to be a bit of a push that comes along as far as the genetically modified seeds, and that particular policy is concerned from Delhi. And if it were to come about, then again some of the seeds companies which have done quite well already could be the companies that could give some kind of a multi-bagger kind of an opportunity.